Hey everybody, James Shepard here with another edition of the Self Storage Insight Podcast. Fantastic episode today. We have Don Tyree on here talking about how he's built his self-storage business up to 27 different properties. We get into all kinds of details about the direction of the industry, operations. We even talk about the really unique investor model that he's using to attract investors and to give them a fantastic experience and a great return. This episode and the entire podcast is sponsored by CC Storage. You can head over to ccstorage.com to learn more about a fantastic self-storage management software. You're actually going to hear Don mention that. He's one of our clients. You'll hear him mention that as part of this episode, and then we'll talk more at the end of the episode. So with all that being said, let's dive into this interview with Don. Hey everybody, I'm here today with Don Tyree. Don is the founder and director of operations at Family Heirloom Storage. How are you doing today, Don?
Great. How are you, James?
I'm doing fantastic. So thanks for joining us. Really appreciate you taking the time. I would love to just get a little background. Tell us how you got into this crazy industry, the self-storage industry. I know you have other things you do as well. So talk about the self-storage industry in particular. How did you get into this business?
I'll try to make it a little short, but it's a long story. But basically in 2006, I moved down to Florida and started working for one of the big companies. And worked there for 4 years and started as a part-time manager and moved up. And then I asked a crazy question, I guess, to them, if I wanted to move up into the company higher as a district manager or something like that, what would I do? And I was talking to a regional manager and they told me, well, you would need to quit here and get experience at another retail place that has multiple units that you manage, and then you could apply back, and with your history we should be able to advance your career that way. And I'm like, that doesn't make any sense to me at all. So I didn't stick around there too much longer,
right?
And then started with an investor. His name was Joe Florentine, and he had just started doing multifamily homes in Southwest Florida. And that was about 2010, 11. And so we got together. He had bought one storage facility. I had the knowledge. I met up with him and started helping him run that one. And then he was like, oh, well, you actually know what you're doing. And I'm like, yeah, I've got a little practice. So we went in and we bought 2 or 3 other facilities, was helping him out on that. And then we ended up getting about 10 facilities from there total. And then in the meantime, in between that time, my wife had joined the company with accounting, and his son, Joey Florentine, had joined with operations to help us. And then we opened up a real estate company down in Southwest Florida in Fort Myers as well. And then he decided that he was like, it's time to slow down for me. So me and Joey took over the company, and we helped him, and we sold like 8 of the 10, and we were down to 2. And then me and Joey started building up the storage facilities, and we got up to 15, and then we sold 13 of them, and that was in 2022. And then I was just gonna, see where it led us to, and right. Then we started building again. It's kind of a addiction. You see storage facilities and you're like, oh, I can add value to this one. I can add. So then we started picking them back up, and we had 10, 12 of them at the time. And then in 2024, we decided to start a brand up, Family Heirloom Storage. And from there, we've been growing, and we're up to 27 facilities right now, 4,000 plus units, and we're actually in contract on 3 more as of this week, and it'll take us up to 30 units, properties total, and 5,000 units. So.
Wow. That's awesome. I love that too. Great. I think so many things about that stuck out to me. One is, isn't it interesting how so often these large corporations kind of lose sight of themselves a little bit, and the best people, they kind of end up kicking them out in a way, right?
Yeah. It just didn't make any sense to me. That's how I knew right away. I'm like, this corporate thing's not going to work for me. So.
I remember I was actually, I was at a job at Service Master. This would have been 20 years ago or something. And prior to any of these businesses that I own now, and I was a regional sales manager. And I was kicked back at my desk, my feet up on the desk with a notepad and I was writing down my strategic goals for the next year when my boss came in and said, "What are you doing?" And I said, "I'm thinking." And he said, "Stop thinking and get back to work." And that was my moment where I was like, if you don't want me to think here, I don't think I have a lot to add. I think I'm going to go do something different. And so I think that's really interesting. So the other thing I find fascinating is when we think about self-storage, right? One of the things that I think is always, not confusing, but gets a little bit confusing, I guess, is this idea of like, is it a real estate investment or is it a business operation? In other words, so much of it is like, it feels like it's passive income. We hear that term a lot, right? But then there's also this big operational side to it. Talk about that a little bit. When you think about self-storage, how do you think about it as the investment side versus the operational side?
I think it can be looked at either way. I think that's the neat thing in the way we work together, me and my partner, Joey Florentine. He looks at it as the real estate side, and I look at it as the business side. So it's that's why I handle the operations and the management of the properties, and he does the acquisitions and handles all that stuff. So, I mean, it can be looked at both ways, depending on the person and how the viewpoint of them. So, yeah.
I love it. So here's a last question on this kind of introductory part. When you look at Family Heirloom Storage and what you guys are building, what is it about the business that sets it apart? Is there some values that you share? Is there a strategic approach? What are you doing that you're like, this is why we're good at it, or this is what we're doing a little bit differently?
We treat every customer as family, and we run our business the same. Every employee, we've had some managers with us for 10, 12 plus years, and we look at them as family. That's where we came up with the name, because Family Heirloom Storage, and at the same time we look at it as our customers as family too. We try to give I say that we try to do a hybrid blend in our business. So we want to use technology, but we still want to not lose that personal touch either. We run some of the properties remotely, but at the same time we have managers answering the phones and talking to the customers, knowing the customers. So that helps out a lot too. So I think it's more of the personal side. A lot of times people just look at their storage customers as numbers and a profit, and we try to just treat them like people, like everybody wants to be treated. So.
Wow, that's really interesting. Yeah, I like that. Yeah, and I think that definitely sets you apart, because I think like you said, a lot of property owners are looking at more as just purely as an investment, especially once they get the ball rolling. It's like, trying to maybe push automation too far to the point that it might be driving attrition. Or driving, that type of thing. So let's talk about that a little bit. When you look at your occupancy rates right now, what is I mean, I know we all want, 100%, but what are you really targeting? What are you expecting as far as occupancy rates? And what are the things that you're doing to drive that and to maintain those levels?
I mean, like you say, everybody would love to be at 100%, but then again, you hear you don't want to be at 100%. You want to be at 95.
Right.
If you're at 100%, you're not
charging enough.
You're losing money. Yeah, exactly. Right. Yeah. So, our magic number has always been like 90%. And if we can stay at that number, it's great. I mean, sometimes depending on the market, some properties, 85% is okay. Sometimes I think people get held up on that number, but where you have to be to make the profit on each facility. And that's where you need to go. We use, we do a little bit of marketing. A lot of it's word of mouth for us, our customers. I mean, we have some customers, we bought the properties 7-8 years, and we have the same customers still there today. So.
Let's take a brief pause here to talk about our sponsor, CC Storage. I want to talk about the latest feature upgrade that we have. So one of the things we're very passionate about with CC Storage is making it easy to use, creating a great user interface that is simple and easy to use for you and for the managers of your properties. And so within that context, creating a new feature is a big deal for us, because we not only want to create the functionality, but we want to create it in a way that's very easy to use. The latest feature that we've built is the idea of expanding our bulk notifications to be able to include custom notification templates with smart fields. So imagine if you had a notification template about past due invoices or past due leases that you wanted to notify people about. You can now go into bulk notifications and you can use a smart search field to look for those people that are past due, and even from that list to check individual people that you want, or even to reach out to them about specific leases that are past due if they have multiple leases. Once you've selected those that you want to reach out to, you can then, it'll auto-populate all those smart fields, and it will send a custom email notification out to those people with their balance, with their name, with their unit number, all of those things that you want to pull in to that template. So we're trying to make it easier and easier to communicate with your customers. Coming up here in a few months, we've got a lot of other really exciting updates, specifically in the near term, within probably about 3 or 4 weeks. We're going to be rolling out some corporate reporting. So for those of you that have multiple companies like Don, where you have different properties under different entities, and you want to see reporting that can be brought up to the surface to look at all of those different ones and the locations underneath each of those companies, we have that coming out here in just a few weeks for the initial version of that, and we'll be expanding on that over the next 3 months. So again, thank you so much for listening into this episode. Before we dive back into the episode though, definitely head over to ccstorage.com, grab a free demo, and let us show you what our software can do for you. So one thing that's always fascinated me about the self-storage industry is the kind of the churn rate. You know, it seems like there is some kind of just natural churn. You know, a lot of people are getting it so that they can move or going to college or whatever it is, where there's like a real life situation. When you look at your kind of overall churn rate, like over the course of say a 12-month period, right? What percentage of self-storage units for you over 12 months are actually changing hands?
We just had a study done with one of our partners, Storage Defender, and they wanted to see how long they did a case study for us. And we actually, our average tenant stay is 4 years, believe it or not, in the entire portfolio. Now, do we have some that are in college towns and it's 3 months and then they're out of the storage unit? Yes, but it's not, it's not normally that way. So sorry about that.
No, that's fine. Yeah, that's so interesting. Wow, 4 years really surprised me. That's crazy. So really,
we knew it was long, but when we actually looked into it and they did the case study and we pulled our reports, that's what it was.
Yeah.
So, yeah.
Wow, that's so interesting. And it sounds like you would attribute a lot of that to this level of service and support. So maybe there's a little bit of an opportunity here that people are not capturing. Where I know there's, I guess what I'm saying is, I think a lot of self-storage operators, they look at this problem of occupancy as a bit outside their control. Right. In other words, people move in when they need to move out, they move out. But I think what you're saying is, hey, you can also move the needle with support and service in addition to these kind of just realities of their life. Right.
Yes, exactly. Yeah. And I know. And then there are some people that they don't have the space and they just store for that long. You know what I mean? They need the extra garage basically, or we have plenty of businesses where they use it as their per se their office, but it's where like plumbers, electricians, that's where they keep all their stuff. So yeah, so you get tenants that are long-term like that as well. So
very interesting. So all right, so I want to zoom out a little bit here and I want to talk about kind of your strategy from the beginning. So you mentioned a little bit of marketing and a little bit of kind of that word of mouth. Then you have somebody who comes to a facility and they want to rent from you. So talk about that a little bit. What have you done to kind of streamline or make that a really good experience for them to come in and actually find a unit, rent the unit, get moved in? Talk about that process, if you would, a little bit.
Sure. So this is where we have kind of a hybrid model, because there's some facilities we have that we actually have in our Whiteville, North Carolina locations. Lindsay, our manager there, she manages 7 properties there out of one office, but they're all within 15 minutes of each other. Sure. So they will call the phone number, they get her on the phone, they can go in the office. We have walk-ins there, but then we have other properties that we manage completely remote. So then they would just, we have phone numbers that goes to our managers, or we have QR codes on signage that'll take them straight to the software that they can rent a unit that way too. So.
Right. Got it. And so they rent their units. Any advice or tips for people on, the gate codes and kind of how to make the whole process as seamless as possible, so that, again, you want that personal touch, but not in a way that's not adding value. So are there things that can be done to really make it a seamless experience for them to get their stuff moved into the unit that first time?
Yeah. You just have to have the right software. You have to, we actually are, right now, our management software that we're just transitioning to is CC Storage, and, they can, when you set it up with them, they can sign their lease right on their phone. They'll get their gate code sent to them, text to them. So it makes it an easy process. So.
Right. Sure. Okay. So we get them moved in, right? By the way, thank you for the shout out for CC Storage, a sponsor of the podcast. So they go in there and they get moved in, right? And then what are you doing after that to kind of keep them, on board? Are there certain touch points where you've noticed, like, man, people tend to reach out, or they tend to have this problem, and what are the things that you're doing to kind of alleviate those friction points so that they stay with you longer?
So the managers try their best to keep an eye on when we get an online move-in, and they will follow up with them, give them a call, say thanks for storing with us. Is there anything you needed? And then sometimes they'll say, well, I didn't get the text for some reason, or with the gate code, and then they would give it to them then. And then we also follow up usually with an email too, saying, thanks for storing with us, and this is your information, your unit number, and your gate code, and all that stuff too. So.
Love it. Awesome. So it just sounds like kind of reaching out, having the communication with them, trying to get at least one touch point from a human so that they can answer any questions that pop up.
Exactly.
Yeah.
Yep.
Okay, great. Yeah, that's awesome. So then the last part, of course, the part we don't want to talk about, but people do move out. So when people move out, I mean, obviously that's an opportunity to, drive that relationship and really, hopefully they refer someone else because of the experience. So anything about the move out that you would say is important to think about to make sure it's not a bad experience?
Not really. I mean, we we have customers that stay longer, but at the same time, if they move out, then that unit's empty so that we can rent it to another customer. So.
Right. Is there anything to the point of friction of like, do you think in the self-storage industry, do people try to keep people captive too long? Like, is there too much of well, you signed this agreement and now you're stuck here, even though you need to move out? Like, do you experience that at all? Or is that not really an issue?
We don't see it really as an issue. So I'm sure plenty of times. Another thing is, as I say, the big guys, the corporate storage facilities, they like to have that rent raise every 6 months, every 8 months.
Mm-hmm.
We're kind of lax on that. We look at rents usually once a year at the most and go from there. And I think a lot of times I always say if you're storing with the big guys, the customers, they're supposed to be, they should appreciate the business, but they're just looked like as a cash cow. It's just constant rent raises every 6 months.
Sure. Interesting. Okay, so I want to switch gears a little bit now. Let's talk broader about the self-storage industry. So when you're looking at the outlook right now, what kind of a market are we in? I know obviously it's going to vary by geographic location, but are we in a buyer's market, a seller's market? Where do you see the next kind of 2 or 3 years playing out right now?
For a while there, we were kind of soft on making new acquisitions. And right now, for us, it seems like it's a huge buyer's market for us right now. The pricing's back down in line. We're seeing pricing we weren't seeing for 3 or 4 years, and now it's back down. So I would definitely say it's a buyer's market right now. So.
When you're out there looking, and you and your partner are kind of looking at these different properties to purchase, what are the top 1 to 3 things that you're looking for? Obviously, we have price, but beyond the actual price, what else are you looking at when you're buying a property?
We look to see where we can add value. So most of the time, the perfect property, if we're looking for, I'd say it would be a mom and pop facility ran with very little marketing. So any web presence, and you think, oh, you're not going to find that anymore. We find them all the time. So you just have to look. But I would say the top 3 would be, like I say, owned by a mom and pop person, somebody that doesn't have a big web presence, and maybe the way the facility looks. It needs a little improvement. It needs a new paint job. It looks like it's been there for 15 years, and we go in and we're able to add value to it and make it a place that a customer wants to rent. So
that's great. I hadn't thought about the marketing side. That's really interesting too, of looking specifically when you look at a place, what do they have right now for marketing? And if that's kind of non-existent, you have a pretty easy opportunity to add value there. So.
Yeah, for sure. Even Google reviews. I mean, you go on their Google page and you see a bunch of bad reviews. You're like, well, we can do better than that. So we can improve it right there.
Yeah, that's great. No, I really like that a lot. Okay, last question for you today, Don. So I really appreciate this. There's so many insights that you have. Sure. When you think about going back in time to when you kind of first went out on your own, and of course you had this investor with you, but when you first got into this as an operator, what are the couple of things, if you're like, man, if I could go back in time and tell myself these things, it would have made my life a lot easier. It would have made me successful even faster. What would those things be that you'd like to share with our audience, of things that you feel like they should know, those that are getting started out?
I think the biggest thing is to trust your gut and do it. I find a lot of people, they're talking about, oh, I want to buy a storage facility. I want to do this. They're doing the research, but I mean, you just have to you have to do it. That's the biggest thing. If I had to go back and change something, what I would say is we would have bought a lot more at the time, because when we're looking at properties, I remember me and Joe Senior. There was one that was in a great market in Florida, and I think it was $35 a square foot. And I was like, I don't know about this one. I'm a little nervous. This is the highest we paid, because we had been paying like $19 a square foot, 23. And so I was like, let's do it. So we did it. And now, if you could find one for $35 a square foot, it'd be like, oh, let's buy it today, So
Right.
I think the biggest thing is that we held back on some properties,
Sure.
and I think we should have just said, oh, let's
Mm.
just do it, because our model is we use investors to purchase property. So I
Right.
mean, at the time we could have tripled our numbers, but it was just we were slowly scaling the business and kind of learning it. But yeah, that's
Sure.
the biggest takeaway I
Mm.
could say for anybody is just you have to do it.
Yeah.
There's so many people, they watch podcasts, they watch YouTube videos, they take courses and all about storage and how to invest, but you have to do it. It's
Yeah.
just you can only do it. That works with anything in business. A
Right.
lot of people like to talk about business and say they want to do it, but if you just have to do it, that's the biggest obstacle.
Yeah, it is. I agree with that so much, Don, because it's like there's so much you just can't really learn. It'd be great if there was an easier way to learn, but there's not. It's like, you can watch all the videos and all that, but ultimately you have to just go do it. And then when you do it, you're going to very quickly learn, oftentimes the hard way, but you just have to dig in and
Yeah.
learn it. Let me ask you one other follow-up question to that real quick, because I know we get this question a lot. So for those out there that are like, hey, they've got, one or two properties and they've been successful, maybe they went and got bank financing for it. They do
Sure.
want to leverage the investor side and kind of go in that direction. Could you give like just a really high level of like, how does that actually work as far as getting kind of syndicated investors, or, how are you structuring those deals so that you're still making money, but you're able to go get this money for the investors? Could you give us like a high level on that, if you would?
Sure. Basically, the way we do it is we it's more of we talk about it. So the biggest thing my partner Joey Florentine says is we should be talking about what we do, and it's that simple. You anybody that's there or ask questions about what you do, you tell them, and then we're doing where we have some investors that had 401ks, so they roll that 401k over and invest with
Mm.
us. So that's an easy way, because there's plenty. I mean, we work
Right.
with people that have retired and work, say, in that railroad industry or something, and they don't know anything about real estate, but they have a 401k and they want to invest with us. So
Yeah.
we do it that way. It's the biggest thing, and we don't refuse anybody. We'll take, $30,000 and put it in a property from someone. I think
Mm.
some people, it's another thing where they research so much on how to do it, but it's basically you find the people that want to do something and
Right.
use their money, and
Yeah.
we've got I think the number's like 78 or 80 different investors we've had over the
Mm.
last 15 years, and I mean it's been very successful. So
That's great. And then I guess just like, again, just rough sketch. I mean, are you traditionally trying to give some kind of a guaranteed return on their investment, or is it more of a shared risk, or does it depend? Like,
the way it works is they come in, depending on the dollar amount they invest with us, they get a percentage of the property
okay.
of ownership, and then our goal is within 3 to 5 years to refinance the property. Then they get the money back, but then they still retain that ownership. And we've been super successful with that model. And
Oh, wow. Okay.
most of the time, 90% of the time, the investors are so happy with that and we usually pay between 5 and 6% interest on their money during that time as well.
Right.
So, but then they have that ownership at the end. So they either get a percentage of the profits monthly, or if we decide to sell, then they get that percentage of the profit
Right.
from the sale. But 90% of the time, the investor wants to take the money when we refinance and say, oh, let's put this in another property.
Right. Let's roll
So
it.
then most of our investors are in for life. So
Yeah.
our returns have been high. We've never had any issues. The properties we buy, we probably look, say, in a year, 100 properties,
Right.
and they have to fit our formula for
Right.
investing in a property.
Right. Right. Well, I love it. Yeah, that's really creative. So awesome. Well, Don, thank you again so much for taking the time to be with us today. Really appreciate you sharing your insights.
Sure.
And just thank you again for all that you've done for the industry already and just sharing that. And then also wishing you great success as you guys continue to grow and scale there.
Great. Thanks a lot, James.
Hey, everybody. Thank you so much again for listening to the Self-Storage Insight Podcast. Really appreciate your time and listening in. I hope that we provided some really good insight for you in this episode. I'll see you next week. Have a great day.